Hello viewers from YouTube and TikTok. I am currently live simultaneously in YouTube, TikTok, and Discord. Today will be another hosting, my hosting for the Blue Guardian live market analysis. I'm just waiting for the Discord to be online. Happy Wednesday, everyone. Happy Wednesday, Genesis. Allow me to share first my screen. Yes, please, Genesis, if you're allowed to, please tag everyone so that we can start with the live market analysis podcast. Thank you, Genesis. Thank you, Mark. Okay. For those who are having difficulty with their connection, if I am currently live both in the following social media accounts. Uh, in YouTube, I am currently live so that those who are having problems with the Discord as the live today, you are free to go to my YouTube account. I am currently live there, as well as in my TikTok account. Um, if you are interested to watch it from there, sorry, you you may check my account because I am currently live there. So here's my account. I am also currently live on my TikTok account. So both YouTube, TikTok, and in Discord we are live. So before we do uh, live counts, allow me first to have a recall of the previous um, my previous podcast hosting. So in my previous podcast hosting, I forecasted that the market is on the correction, and what we are experiencing right now is just the bounce of the wave 4, which can be labeled as WXY. And to explain that further, allow me to show you a video the video I have uploaded in my YouTube account last March 16. It was the continuation of my analysis last March 5. My last podcast hosting was last uh, March 19, I mean. March 19, and then I have updated this in my social media accounts, especially the Discord account, and then
downtrend and possible.
let's just watch the first 10 minutes of this video so that you will have a good understanding of what I am about to update. But allow me to change the playback speed into 1.25 so that we can maximize our time in updating the chart. So my apologies if ever the screen recording that you are seeing is actually my live studio. I tried to record this on my OBS, but unfortunately I forgot to change the Windows capture into the my web browser. Instead, I have captured my live studio. So that's the reason why I have here the portrait and the landscape. Nevertheless, what's important here is the update that I have made last um, March 16. So allow me to play the first 10 minutes into 1.25 speed so that we will have an idea of what I am about to update. Please let me know in the chat if you can hear the video before I will continue playing it. Allow me to play a little.
So just this
And
morning, I have shared an analysis of gold in my
may
community
I know
market server.
if you can hear the sound coming from my video? Okay, so good. So we can now start, and let me just mute my mic first.
First community, and this is the analysis that I've shared. I'll be updating this in the current wave counts around here, and as you can see, I have created an analysis that forecasted both the price and time, the Elliot Wave. Now here, as you can see, the first wave down after the all-time high price created 5 waves down. So if it created 5 waves down, then we are expecting a possible zigzag correction, because a zigzag correction, the first wave A of a zigzag correction is composed of 5 waves down. Wave B can be any type of correction. It can be zigzag, or it can be double XY, or it can even be a triangle. But in terms of the wave C here, this one, the wave C must be composed of 5 waves. Using this as your invalidation of the possible zigzag, and this will be the confirmation, the previous all-time high price. Now, what's the reason why I forecasted it this way? There were two possible corrective structure for this uptrend here. One was WXY, and this one is an ABC, or a zigzag. The reason behind this is that this is the analysis 1 hour time frame, so we will try to check the internal waves. For some, this can be interpreted as 1, 2, then 3, 4, and 5. Using this as our A, and then this is another 1, 2, 3, 4, 5. This is another A. So it's also valid to project that this can be considered as an ABC instead of just an A. However, if I have forecasted this as WXY, labeling this as A, B, and then the C, then the next uptrend should be an ABC up. However, although it's still valid to become an ABC, because the invalidation of a WXY scenario will be this price. And as of now, we are still above that bullish last line of defense. So we are still above that bullish last line of defense. So therefore, the WXY scenario, when I say WXY scenario, this one, let me change this into a red colored count. The WXY scenario is still valid. However, of course, we are already close to the last line of the bullish last line of defense. So if it is a WXY, then we must have the first 5 waves, then an ABC or a WXY correction here, and then another 5 waves up. And the possible target will be H2 implied fair value gap. That's for the WXY. But as of now, as things are unfolded, especially the price action that happened last time, we cannot ignore the possibility of a correction that is an ABC correction like this one. What's the reason behind this? Okay, the reason behind this are the following. We can interpret this as the first wave, second, third, fourth, and then fifth, meaning the first wave of this possible 5 waves down of the zigzag higher time frame correction can be considered as a leading diagonal. Why leading diagonal? Simply because the wave 1 here was overlapped by the wave 4. In Elliot Wave Theory, when wave 4 retraces beyond the territory of wave 1 but respecting wave 2, then this will be considered as a diagonal. So if this is a diagonal, then this, and this is part of the corrective wave 2. And this can be labeled as an ABC, or it can also be valid to be counted as a WXY. But here, if we will consider the 5 waves up here and then a possible triangle wave B, then we can consider an ABC where B is a possible triangle. Okay? So if we will treat this as 5 waves and then we will treat this as our wave 2, then it's safe to forecast that the zigzag correction will be the most logical scenario that will happen. And as you can see in the shared analysis that I have given, I even forecasted the time wave 1 will possibly reverse. And then my target, by the way, for wave 2 is at 5,150. Now, going back here, allow me to do some live count. If we will treat this as
Okay, allow me to just pause from this so that we will have an idea of my analysis last March 16. Actually, it was not March 16. It was yeah, it was March 16 in the morning. I have shared this analysis including the time, not only the forecasted price but also the forecasted time. So basically, this is the time X price based on Elliot Wave Theory. I have clearly stated in this analysis that wave 2 reversal will happen from March 16 to 17, and then from March 16 to 17, a continuation of the downtrend will happen, and the continuation of the downtrend may end from March 24 to 26. From here, I am expecting a wave 4 bounce. Usually, it's for a basic uh, bounce or correction. It's just an ABC. Later, I will update what happened here. Then after that, I'm expecting a reversal of wave 3 here of 5 from April 1 to 8. Now, for you to see a better view of this analysis, allow me to go to that actual analysis. So, as I've said, I have shared this analysis live on my YouTube account, or it was analyzed in TikTok and re-uploaded or uploaded in my YouTube account last March 16. As early as March 16, I have forecasted already the following waves to complete the corrective structure of gold. And after this, you will see that the March 16 to 17 time projection for the completion of wave 2 is within that projected time, March 16 to 17. Then after that, I was expecting, based from my original analysis, I was expecting a downtrend continuation from March 16 to 17 for the wave 3, parenthesis wave 3. And as you can see, that really happened. Continuation of the downtrend, at least based on my analysis, the internal waves of wave 2 to 3 must be at least 5 waves down. Now, after that, on last March 20, I have shared the updated Elliot Wave counts on my Discord community, and as you can see, I have forecasted that the third wave here was not yet completed, and I forecasted that it will bounce uh, at this M5 implied fair value gap, or in the 10 minutes time frame implied fair value gap. From here, it will continue to go down and will sweep this low of the previous February low, I mean, and then that's what really happened. The February low was swept for the internal waves of this wave 5. From here, the bounce, or rather the reversal point of interest, is at 10 minutes implied fair value gap. And as you can see, the reversal was very close to that implied fair value gap. Later on, I will show you this implied fair value gap. Only the lower boundary was taken, but not the upper boundary. And then from here to here, I'm expecting a reversal from March 24 to 26. The reversal happened before 24 in the evening of March 23, which is close enough to my uh, projected time reversal, March 24 to 26. And from here, I updated my Elliott wave counts in my community, and some were uploaded in my YouTube account. And then I forecasted at least the basic corrective structure for wave 4, which is possibly an ABC. So from here, I was expecting the bounce now. If you are an Elliottician, or if you have been following my analysis in my Blue Guardian podcast hosting or in my social media account, this bounce was expected. We are not surprised, even with the many announcements made by Trump. And then after that, from here, since this is the expected Elliott wave counts, um, I projected that from here it will continue to go up. And this is actually a 1 minute time frame count. And I have uh, shared this in my community the day after I have shared the possible wave 4 structure, wherein my point of interest for the possible reversal will be the M30, or the implied fair value gap, at 30 minutes time frame. And from here, as you can see, my point of interest at M30 implied fair value gap was taken. From here, it did a reversal, and we know what happened after this reversal. The market continued to rally simply because the ultimatum that was announced by Trump was extended, and this extension will the end of this extension will be until March 6 or 7 only. So the rally that we are experiencing right now is just a reaction to the postponement of the ultimatum given by Trump uh, to Iran. And then um, last week, I have updated this analysis and shared that instead of originally forecasted this as a simple ABC, the the corrective structure became a complex one. So instead of just an ABC, I have now considered the WXY scenario. In Elliott Wave Theory, when we say WXY scenario, we are referring to two sets of ABCs. So this is just the first ABC, and from here, I am expecting another ABC up wherein the invalidation of the WXY scenario is at 4,305. So this was shared in my community last March 27. Then after that, we know what happened after March 27. The market did uh, diagonal 5 waves up. In Elliot Wave Theory, a diagonal motive wave means wave 4 retraces beyond the territory of wave 1 here. So if wave 4 retraces beyond the territory of wave 1, as long as this wave 4 will not break the low of the wave 2, this will be considered as a diagonal motive wave. But please take note that in Elliott wave theory, wave 3 must not be the shortest always, regardless whether it is impulse or whether it's diagonal. So from here, I am expecting already since I have posted this, I was expecting already at least 3 waves up or a 535 bounce from this. So the the rally that we are experiencing right now were wave by wave forecasted by me in my social media account and in my community. And then after that, just this morning, I have updated my counts that the market is close to the completion of the 5 waves of this encircled wave C. And as you can see, the I am already expecting a correction or a retracement from this wave 3, parenthesis wave 3 to wave 4, and then my target for the possible wave C reversal will be at 4,855.37. Of course, I need some confirmation before I will try or before I will consider shorting this. But basically, the my wave by wave analysis since from my previous podcast hosting year to my periodic or my regular updates in my social media account and in my community, they are well guided in terms of the directional bias. So let us now check the current situation of gold in terms of Elliott wave theory. Now, allow me first to show you the before and after of this analysis, so that we will have an idea of my shared analysis in my podcast hosting last time. So from here, let's try to do it. Let me split the screen so that I can share the before and after. So as you can see here, the time and the price was well projected based on the rules of wave counting and measurement of Elliott wave theory. But in terms of the time projection, this time projection can't be found in the original book of Elliott wave theory. This is my own way of projecting the time based on the wave counts. The accuracy of the time projection relies heavily in the accuracy of the wave counts of the Elliotian. So if you're interested with the time X price projection, this is also shared in my community, which can be which anyone is allowed to join for free. So from here to here, and now let us update this wave count that I have shared this morning in my community. So if if we are close to the completion of this wave C, then therefore we need to check the internal waves carefully if the internal waves are already completed or not. But allow me to do some minor correction based on my previous analysis to the current analysis. In my previous analysis, I placed the B here instead of here below the wave 2. So allow me to adjust this or to correct myself, because this uh, wave B correction is not the usual ABC correction. This can be considered as a combination. Now, allow me to show you an example of this combination from the ElliotWave.com itself. The the Elliot Wave organization that gives certification to become a certified Elliot Wave analyst. So, what type of correction is this? Allow me to show you this. This is the type of correction in this wave B. So, this one. Let me just zoom this. So, this is the type of correction that I was thinking in this particular part of the correction of the uh, wave C. So, sorry, wave B, I mean. So this is the wave B. Let me just move this a little. So this is the wave B. So if this is um, my identified corrective structure, then I should follow the correct wave counting. So this is obviously a flat. This one is a flat A, B, C, and then, or rather, a zigzag, and then another zigzag, or can also be considered as a WXY here from here to here, and then from X to Y here, from X to Y here is a triangle. So a triangle that is found at the as an internal waves of the waves X to Y. So we have here A, B, C, D, E. So A, B, C, D, E. From here, we uh, the market gave us a reversal, and that reversal is at these 5 waves up. And then from here, we actually traded this live. I did a live trading slash analysis last time, and we have traded this movement from here up to here. And then what's the current situation now of gold in terms of Elliott Wave Theory? As I have mentioned in my previous analysis here, I am expecting a WXY bullish scenario. So when we say WXY bullish scenario, I'm actually referring to this one. Let me change the color of this wave counting into red, and allow me to show you the lines of the wave so that you will have an idea of my forecasted structure. A W in Elliott Wave Theory, a WXY structure is an upgraded structure of the basic correction A, B, and C. So your if the basic correction is an ABC, which is usually composed of 5 waves, 5 waves for wave A, 3 waves for wave B, and then 5 waves for wave C. So basically, if we will try to, if I will try to show you the internal waves of this one, this will be wave 1, 2, 3, 4, and then 5. Allow me to show you the lines. And then wave B, or wave B here, will be composed of at least 3 internal waves, like this one. And then for the wave C, must be at least, must be 5 waves up. So as you can see here, originally I have forecasted the structure of wave 4 as an ABC. 5 waves up. If you will try to look at the internal waves here, 1, 2, 3, 4, 5. So 5 waves up, 3 waves down, and then 5 waves up, which is actually the basic ABC or zigzag correction. However, after creating an ABC here, the market did not break the March 23 low, which will that's the actual reason why I have decided to consider this WXY scenario. So in the WXY scenario, the 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 invalidation is the wave W of the previous, or the wave B, I mean, of the previous ABC. The lowest of the encircled wave B here is this one. That's the reason why I use it as the invalidation of the bullish scenario. So from here, from here, the leading diagonal wave A, I'm expecting an impulsive wave C. I even told my community about this one, that if we will apply the rule of alternation, or the alternate rule in Elliot Wave Theory, if wave A, or if the leading reversal wave, if the leading reversal wave, or the wave A here, or it can also be wave 1, or basically the leading reversal wave is a diagonal, I'm expecting that the internal waves of the B to C will be impulsive. Uh, if you are, if you have been following my uh, regular updates, then you are pretty aware of the impulsive movement of the gold right now. So, what's the, where are we in terms of this last ABC? As I have mentioned a while ago, the basic correction will be just a simple ABC, or a 5-3-5 correction. However, if you will look at the current market, the basic ABC or 5-3-5 correction can no longer be considered, because it created two sets of ABCs. And these two sets of ABCs can be considered as a WXY. So here, if two sets, or if a zigzag is upgraded to an extended correction, then we will no longer call it as a zigzag or an ABC, but instead we will call it as a WXY correction, or a double combination. So this is the structure of the current wave 4 of gold. And where are we in terms of Elliott wave counts? We are close to the completion of the last wave C, or the internal waves of wave C, which must which is composed of 5 waves up. So here, from my shared analysis this morning or this afternoon, I am expecting that it will still continue to go up to 4,855 before we see any reaction if the internal waves of wave 4 to 5 here will be completed, meaning the 5 internal waves or the internal waves of wave 4 to 5 here, the one with the parenthesis is composed of 5 waves up, then I will consider the implied fair value gap identified at 45 minutes at 4,855.37 as my possible point of interest for shorting. But of course, there are confirmations that we can use. Basically, the M45 is just one of the many confluence that I can use. But basically, if I will just use Elliot Wave Theory, all I have to do is count the internal waves of this wave 4 to 5 before I will decide whether it's completed already or not. Now, let's update the internal waves of this wave 4 to 5, or are we already on the internal waves of this 4 to 5? So allow me to zoom it from 15 minutes time frame to 5 minutes time frame. Okay, so 5. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. So my original point of interest for the wave 4 reversal is at M30 or implied fair value gap at M30 or M5. For those who are not familiar with implied fair value gap, allow me to show you or to explain to you quick how to identify an implied fair value gap. Now, an implied fair value gap is a three candle pattern wherein the middle candle is the largest among the three candle pattern. I repeat, first condition for it to be considered an implied fair value gap, the middle candle must be the largest candle or largest bodied candle in the three candle pattern. And then the two surrounding candles, the left and the right candles, has an overlapping wicks. So the wick of the candle 1 overlaps the wick of the candle 3. So which makes it as an implied fair value gap. Now the question is how to find how to identify or how to plot the implied fair value gap. All you have to do is get the 50% of the left wick. So if this is the left wick, all you have to do is get the 50% of it. Allow me to show you the to activate the levels. So 50% of the left wick and 50% of the right wick. And then in my case, I usually label it based on the time frame where I have identified the implied fair value gap. And if you will try to look at the market, this implied fair value gap was already tested, but only the the upper boundary of the M30 implied fair value gap. Ideally, for this implied fair value gap to be considered valid, the this implied fair value gap must not be body broken. So once this becomes if there will be a body broken, or if this will be body broken, this will no longer be considered as a valid implied fair value gap. So from here, we saw a good reaction from the upper boundary of the implied fair value gap at M30, and it continued to go up. Just like in my previous live session, I have mentioned there that almost all reversals have an implied fair value gap. And I did explain the reason why implied fair value gap is, for me personally, I call it as a statistical implied fair value gap. If you know volume profile, most of the uh, point of control are within the implied fair value gap. And just like what I've mentioned a while ago, most reversal in most reversals you can find an implied fair value gap. Now to show you that in this reversal there is an implied fair value gap, I think I have identified an implied fair value gap at M5 or 5 minutes time frame. Let me just scan it. By the way, if you are not yet familiar with implied fair value gap, I recommend using this indicator, ICT implied fair value gap. But please take note that not all implied fair value gaps can be detected by this. So it's still best that you know how to plot, or you know how to identify manually an implied fair value gap. So obviously, this is the implied fair value gap detected by the indicator, and only the upper boundary was tested. Just like what I've said, almost all reversal, in most reversals, there is an implied fair value gap. So let me just scan the M15, the M10, okay, 30 minutes, 45 minutes, 1 hour. Let me check if there's an implied fair value gap here. There is an implied fair value gap, but acts as an inverse implied fair value gap. For sure, many of you are aware with the implied fair value gap already, or rather the inverse fair value gap. So what is um, an inverse fair value gap? An inverse fair value gap, for example, we have here an implied fair value gap, but in this case, the implied fair value gap that I am referring to is not actually this one. It's not actually a regular fair value gap, but an implied fair value gap. So if this is an implied fair value gap, then, sorry, imp- this is not a regular fair value gap. Instead, it's an implied fair value gap. But basically, this implied fair value gap can also be used as an inversion fair value gap. Inversion implied fair value gap. So when do implied or inverse implied fair value gap will happen? If originally the largest among the three candle pattern, or the FBG here, is the middle candle. If the middle candle is bearish, then it should be called as bearish implied fair value gap. However, if it is bullish, or if the middle candle is the largest bodied candle is bullish, then it should be bullish implied fair value gap. But in this case, this identified implied fair value gap is a bearish implied fair value gap. But it was tested once, but did not hold, so it got invalidated. Once there once that implied fair value gap will be invalidated with an impulsive candle, or a large bodied candle, that becomes an inverse implied fair value gap. And this inverse implied fair value gap can be used for a possible reversal. And as you can see, we have a very good uh, we have a very good reaction from the previous invalidated implied fair value gap at M30 or M5 I mean, and then from here we have a reversal and continued to go up to my original target, which is at M45 implied fair value gap at 4,855.37. So to show you the implied fair value gap using the indicator, you will see here this one, the three candle pattern. So the three candle pattern is this one. The middle candle is the largest among the three candle pattern. It is a bearish candle, therefore it should be a bearish implied fair value gap. The left and the right are candles with overlapping wicks. All you have to do is get the 50% of the left wick and then the 50% of the right wick, and you will get the implied fair value gap. So this will be my target for the completion of the internal waves of the identified WXY correction. A while ago, I have mentioned about the reversal that happened in M30 here. I have mentioned a while ago that there is an implied fair value gap that can be found around here, and let's see if there's really an implied fair value gap that can be detected by the implied fair value gap indicator. So this is the 30 minutes time frame, and as you can see, we have the upper boundary and the lower boundary. This serves as our POI or point of interest for the possible reversal. Okay, now let's proceed with the current internal wave counts here. Since the third wave is already completed, therefore, and we got a very shallow wave 4 here, according to the rule, the target for wave 4 are the following levels. All you have to do is measure it from the wave 2 here to wave 2 to wave 3, the parenthesis wave 2 to 3, and then get the 236, 0.382, or the zero point 0.5 levels. These are the ideal levels for retracement. And as you can see here, we did not even reach the 0.236 level, which is supposed to be the shallowest retracement for wave 4. So which will give us an idea that this is an extension. In Elliot Wave Theory, an extension can happen on waves 1, 3, and 5. But in this case, the extension may happen at the internal waves of this wave 3. So when I say extension, I'm referring to this one. Allow me to illustrate it first so that you will have an idea. So when I say extension, I am referring to the internal waves of the wave 3 here. Basically, wave 2 to 3 must be composed of 5 internal waves. So 1, 2, 3, 4, 5. However, there are cases wherein wave 5 of this wave 3 becomes extended. So when I say extended or extension, meaning if wave 4 here creates a shallow retracement, just like what is happening here, then wave 4 to 5 can be extended. And that extension must be composed of 5 waves up as well. So meaning we are currently in terms of Elliot Wave Theory, we are currently around here of this possible extension. So from 4 to 5, there will be a possible extension, and we can see already some signs of this extension. Meaning, we may see another 5 waves up before we complete the internal waves of this parenthesis wave, uh, wave 3. So therefore, allow me to use a different color for the wave count so that you will not be lost in terms of the wave counts. So this will be the possible wave 1, 2, and then 3, 4, and then we have here the 5. So there's a high probability or high chance that the original M45 target for wave B is just part of this wave 3 here. So let me change the color into blue. So currently this is the wave counts or the Elliott wave count of the current bounce or rather uptrend internal waves, and then just waiting for this extended wave 3 to be completed. And once we have completed the internal waves of the wave 3, we may see a completion based on my original projection that the reversal may happen or the downtrend continuation may happen from April 1 to 8. So after hitting the my M10 target or M45 target here, there may be a correction that or a downtrend continuation that will happen between this forecasted time frame from April 1 to April 8. Please take note that the original analysis of this one was shared uh, since last March 16. So if you want to appreciate how time X price works in Elliott Wave Theory, perhaps you may consider checking my tutorial about this time X price. So that's my update for gold. I'm still expecting that the market will still continue to rally and will eventually hit the 4,855, and then from here there will be a shallow retracement for before it will continue to go up to complete the internal waves of a WXY correction that was well forecasted wave by wave in my social media account. Now, after this, let's proceed now to BTC. So, in my previous analysis or in my previous live session here in Blue Guardian, I have updated the counts of gold or rather the Bitcoin, and I have forecasted that it will create 5 waves up. Allow me to go to that part.
Wave
Let me
2.
just
Then
mute this and then not this one, sorry. This the let me just this live. Let me show you my previous analysis on BTC. So this is my previous analysis on BTC. I originally forecasted it to become a ending diagonal wave C, but although my forecast is it will still test the following CME gaps at 77,000.7 to 84,000. Only the 77.7 thousand I think was tested by Bitcoin. And then from there, I have given some updates in my previous podcast hosting that this will be my structure for possible ending diagonal wave C of an expanded flat scenario. Expanded flat scenario because this one failed to create 5 waves up. So if this failed to create 5 waves up, then therefore this will be considered as an ABC, not as internal waves of the wave 5. Most eluticians will forecast or will label this as the wave 5, but in my case, since I've been doing the wave by wave counts from the higher time frame to the lower time frame, I will stick to my analysis that since November 2025 that my corrective structure is an expanded flat scenario, meaning wave B to C must be composed of 5 waves. In this case, these 5 waves is composed of 3 waves down for wave 1, 3 waves up for wave 2, 3 waves down for wave 3, 3 waves down for wave 4, and 3 waves down for wave C. In this case, we are in terms of the Elliott wave counts of Bitcoin for wave 4, we are still within the wave B of the 3 waves down of wave 5. So meaning I'm still expecting a 5 waves down from this 1 week CME gap, creating or breaking the February low. And after that, I have shared this analysis in my previous podcast hosting. This is the one that I've mentioned a while ago, a possible ABC wherein wave C is an ending diagonal, but this one failed. So it only took the first uh, level, excuse me, first level of the 1 week CME gap. Then after that, just yesterday, I have updated my accounts on Bitcoin, and I have forecasted that it is currently creating a wave 2 of the nested 1-2 scenario, meaning from this price, uh, when this analysis was shared, the price was around 66,597. And I was expecting that it will create a new high around zero point 0.5 to 0.7886. And if we will try to look at the chart right now, we have already tested the zero point 0.5 level, but not yet the 0.618 level. The invalidation of the 5 waves down scenario for Bitcoin will be the 72,040.6. Once we break this, then the corrective structure may change from a possible um, ABC. Actually, this should not be considered as an ABC, but a WXY. So allow me to correct myself, just like the upgraded correction that I have made in gold. So this will be no longer considered as a zigzag, but a double combination or a double zigzag. So the invalidation of the bearish scenario for the mini 5 waves down breaking the possible low last February will be at 72,040. So if you can see an entry model close to that invalidation, perhaps you may consider shorting it from here. But please consider the fundamentals. Remember that a technical or fundamental analysis will tell us when to trade, and technical analysis will tell us where to trade. So, based on the current global events, especially the extended ultimatum of Trump, then we are expecting a high volatility again in April 6 or 7. So before that, observe the market carefully in terms of directional bias using market structure. to be specific, Elliot Wave Theory, then you are aware, well aware of the directional bias of not only gold but also Bitcoin. So that will end my session for today. My apologies if I did not check the chat because I was too focused on giving you an update on the gold and the Bitcoin. By the way, these are my social media accounts shared by Kras. If you are interested in learning Elliott Wave Theory, or if you want to learn some uh, ICT theories with statistical touch, then feel free to follow my TikTok, my YouTube account, and you can even join my community if you want to learn Elliott Wave Theory and other trading system that I am using. Okay, so I hope you all learned from this simple session, and we will now proceed with the giveaway account. May I ask Genesis if what will be the numbers for the giveaway accounts? 5 random within 52. Okay, so let me use a random number generator. So 5 numbers from 1 to 52. Let me just double check if it was 52 that was mentioned by Genesis. Yes, 5 random numbers within 52. Thank you, everyone. 5 numbers. Once I click generate here, the numbers that will show around here will be the winners of the giveaway account. So here are the winners. The screenshot was already made by Genesis during the or halfway or around 75% of our session. Here are the winners. The numbers are 3, 22, 38, 36, and 10. Allow me to paste it there. Yes, that's correct, Genesis. Let's just wait for Genesis to announce the winners.